Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. You know, I get traders writing me all the time asking, Eric, how can I better choose market direction? Well, to that end, I'm going to introduce you to an indicator that I use from time to time. I don't mention it very often, but it's very good for picking market direction. It's called DMI, and DMI stands for Directional Moving Index. It's actually a pretty simple indicator to use, although it looks a little bit complicated. DMI, well, here, let's bring open the DMI window so that you can see the different settings on it. Here on DMI, we have what they call DMI Positive and DMI Negative. And those are represented by these green lines and red lines on the indicator. What DMI Positive measures is bullish market pressure, and DMI Negative measures bearish market pressure. Whichever line is on top is the side of the market that has control over price at that moment. The greater the distance between the two lines, the more influence the upper line has. So in this instance right here, the green line is well above the red line, suggesting that there is a very strong bullish market occurring right now. Here, the red line is above the green line, suggesting that the bears actually have control of the market. Now, as is the case with all indicators, DMI is also a lagging indicator. The traditional period for DMI is a 14-period default. I changed mine to 13 just to make it perhaps a touch faster. And with DMI, you're also going to notice that there's also this blue line on here. This blue line is actually called the ADX, or the average directional index, or it's the difference between the DMI positive and the DMI negative. It can all get very confusing, but what's important to remember is that when the blue line is rising, when the ADX line is rising, that's showing a building trend. Now, DMI is measured on a scale, a percentage scale, from 0 to 100%, and traders will typically put some sort of threshold, price threshold down to suggest when the trend has begun. Some traders like to have a very high threshold. They like to have like a 40% threshold. The idea is that the market is not trending until the ADX, that's this blue line, actually gets above 40%. Now that sometimes works better in day trading markets when the markets are moving a little faster. It doesn't always work so well for end of day trading. I've gone with a 25% level, and all it does is alert me to when the market might be starting to build a trend. You'll notice when you go back through your DMI indicator that when you look at these points where the ADX, that's that blue line, gets above the 25%, as it did right here, you'll notice that we have a very nice trend resulting. Here it dipped down, came back above, and we get another push higher. So you'll also notice that a lot of times when the market might actually look a little bit bearish, or you might not be sure what's going to go on with the price, sometimes DMI will give you that little bit of a tip that you need. Now, right now, DMI is kind of swapping colors back and forth. Here the bulls have control, here the bears have control, now the bulls have control again. What I'm looking for right now is I'm looking for this blue line to start to show a little bit of upswing to it, and then that will make me more alert to a trend that could be building. But at any rate, you can see that right now, the green line is above the red line, suggesting that the bulls have control of this marketplace. So even though we're pretty much bang on even with our moving average, like prices are not that far from the average price, DMI is suggesting that, hey, there might be a push higher coming here in this particular market. In that case, if I'm looking at actually taking a trade here, I'll probably structure a trade either to take advantage of a breakout above this obvious resistance level, or maybe I'll make it a little bit tighter and take it above the current resistance. Remember, resistance is our green-red bar combination. So by using a tool such as DMI, I think you'll find that you're going to keep yourself on the right side of the market more often than not. And very often it will tip you off to opportunities that you don't necessarily see, like something that we have happening right here in this particular market. It remains to be seen whether or not we're actually going to get a bullish break, if this is going to hold true. But the fact of the matter is we can still set up our trade and take advantage of the information that we have available to us right now. So if you're having trouble picking direction on your trade, if you find yourself getting ready to sell and the market rallies, or getting ready to buy and the market declines, maybe you want to put DMI on your charts and use that little extra information as a gauge to tell you what side of the market you should be looking at trading. And that is this week's Truth.